took away?
I really like it. I enjoy the 2 sessions the most with about the Valve building. I thought it was very practical, easy to take a steps. I really think that I will rewatch that thing. And I agree with you. I think that it was also entertaining. Like I was dancing during the Red Bash. It was really cool seeing actually Gary singing and playing the guitar. I thought it was really awesome. Like I feel like almost being there. It was very nice during the snowstorm, being just home and kind of enjoying it. So it's very good.
Providing that we do this in person next year in Florida, it's awesome. Like you feel the love at the convention, even amongst 20,000 people. It's just one big family. And then we get a lot, we can't take all the classes, but whatever you take, Vandola, you share with me. Whatever I take, I share with Ma. Whatever Yolanda takes, she share with Freddie. So that at the end, we get all the information because we can't possibly go to all the different classes. But save your money now, because if COVID is not here and we get to go, it's going to be an awesome event. Trust me. I went to New Orleans and it was exciting.
Yeah, and super grateful for them. I mean, doing it considering that Texas went through horrible things and they were able to quickly, it was almost 50,000 people attending and I didn't have problem with my internet at all. So I was like, wow, they're really, somebody's working very hard behind to keep it going, considering the weather and the problems which they had in Texas.
The cold, the freezing of the pipes, the water, the relocation, they did a good job. Good job.
I enjoyed it. It was my first time. I mean, it was overwhelming because it was an action-packed agenda. But I was able to, hop into different sessions, whether it was, a lot of it was command, and a lot of the talk centered around your database, keeping your database up to date. So that was like the biggest takeaway for me, because I feel like there's times where I do have downtime that I can't update my database. And so I see the importance of it. And then the whole networking, I was able to network with other agents, around the country, so to speak. And, that was great. And just, hearing like different aspects from different levels of agents, and everyone was so nice, either chatting or texting. I got like a couple of texts, I got a couple of emails. So that was really nice. Even though it was virtual, I felt like it was very personable. And then the games, I think the games, I learned a lot from it too, because it was fun. But, you were thinking on your toes, like, what is the number one thing that a buyer should ask for, have, or seller? So it was quick. So you have to think quick. And it just elevated my thinking of real estate and how you do business. So it was 4 days of action packed, but I'm definitely going to rewatch the videos. I had multiple things going on behind me. So, total concentration. I didn't have full total concentration, but the good thing is that it will be online till April. So I'm planning on going back to review some of the sessions.
Absolutely. I agree with it all. And that's just a taste of what our company gives us. But we got to plug in. We got to tune in. If you don't tune in, you don't know what the benefits as a whole of the company. They're teaching us how to be independent contract, but business owners. So trust me, 16 years with Brand X, I ain't have nothing like this. Most excitement I may have got was going to the Realtors Convention every year to get the education. Yeah, we may have had a class here or there, a special speaker, but what KW is offering us as agents is uncomparable to other companies.
Can I add to that, Karen? One more thing is that after the class and they're giving us the information about the podcast that Keller does, like it just fed more information, and so I automatically started downloading all the episodes, and it just gave me like more insight on what they were saying during the conference with these podcasts, because they're so individual on like wealth management and how to, get the circle of sphere bigger, and how to kind of different angles to get new clientele. And it's like a circle, right? And so it's unbelievable the amount of information, but you got to take it in little pieces and write it down, and then go back, and it's like going back to college, to be honest with you. It's unbelievable.
Marty Brodsky has joined us. Marty Brodsky is an attorney. He does everything. He's been with me over 18 years in my career. He was my first attorney. He's always did weekends,
Your
days,
first
and
and
nights.
last, Karen.
Huh?
I said your first and your last, your only.
Yeah, he's my go-to for everything, honestly. And I want y'all to use him as much as I do. I trust him 100%. He carried me through the short sale period. I think 2009 to probably 2012. I probably did the most short sales for him. So he has extensive knowledge. And if his mic is ready, because it's on off now.
I know it was muted. I've been talking this whole time.
So we will let Marty take over for us.
All right, thank you. So we're talking about short sales, right? I missed your beginning, Sarah, I was late. Would it be good to give a real short explanation of what a short sale is, what that even means?
Let's start off with that.
All right, so very basic. Here's what a short sale means. It basically means this. When we sell a property, let's just use a number for 500,000, just to pick a number, right? And short sales, they could apply to a $69,000 property or a $1 million property, right? Anyone might be a short sale. So don't think when you're going out on a listing appointment, oh, this is an expensive property, so I don't have to even consider it to be a short sale. But here's what it means. Let's just take a $500,000 property. Now, when we sell it, do we get $500,000, right? Does the seller actually walk away with 500 grand? No, you guys should be getting 6%, right? And then they have legal fees, transfer fees, adjustments, taxes, whatever. So they usually get about 92% of the sales price, right? I assume they're going to lose 8% in the transaction. So 92% of 500,000 is $460,000. So our next question is that in a short sale situation, which we'll get to in a moment, is how many mortgages do we owe on this property, right? Remember, there could be your first mortgage, right? Your second mortgage, which is actually called a home equity line. Now, make sure when you go on your listings and you ask, how many mortgages do you have? Don't just say mortgages, loans, equity lines, whatever they want to call it. Because there are a lot of times our clients will say, I only have one mortgage. And then when the title search comes in, all of a sudden there's a second. And they're like, oh, but that's an equity line. For our purposes, an equity line is a mortgage. It's got a recorded mortgage attached to it. And it's something we're gonna have to pay at closing, right? You don't get to just keep a home equity line open when you don't own the home anymore, right? It's home equity. So we gotta ask them, first mortgage, second mortgage. Some of our people who are in distress haven't paid their maintenance fees, right? And now they owe money to their maintenance fees. And now when we get these things together, all of a sudden we see they owe $480,000, right? Now they thought by selling the home by 500 grand that they could pay off their loans and everything. But as you just saw, we only net 460. So we're short. We don't have enough money, right? We're short what we owe. So our client has two choices. Either they've got the 20 grand in the bank to bring to closing, and now we can sell it. It's just a normal sale. Or if they don't actually have the money, now we're stuck in what's called a short sale situation, right? We're short the money we need to sell it. So what is that situation? And the best way for me to describe it is that a short sale is really a bankruptcy. Right now, a bankruptcy really says, hey, I got a whole lot of debts and I don't have enough assets to pay it off, right? So you go to court and you ask the court to decide who gets what money, right? And to let you go from your debt and walk away clean, right? So in a short sale, what we really have is a special situation. We have a situation where we really only have one debt, right? That debt is the house. And if we can just get rid of that one debt, we're okay. We don't need a whole bankruptcy, right? Bankruptcy is appropriate when we've got the house and credit cards and medical bills and your student loans and unpaid child support, right? Now we've got so much stuff, it should be a bankruptcy. But when we only have the house and we can get rid of the house, we do a short sale. But the process is almost the same as a bankruptcy, except it's private, right? Bankruptcy, we filed in court. Short sale, we're filing with the lien holder, right? We're just going to the bank and we're saying to them, listen, the house is worth 500 grand. I owe you 480. I'm only getting 460 and I'm broke otherwise. Will you agree to take the 460, even though it's short what I owe you, and let me walk away from the debt, right? And the bank's answer is going to be maybe. First, I want to do an appraisal to see that the house is actually worth 500, right? Because if it's worth 550, 600, they may say no, right? Up the price and sell it for more. But let's assume we're all going to sell it for a reasonable price. So once we get past that first stage, they're then going to say, okay, prove to me that you're broke. I want to see bank statements and tax returns and hardship letters, and give me an accounting ledger that shows why could you afford this when I gave you the loan and today you can't afford it, right? And most of our clients hopefully have changed circumstances, right? Like what we're going to be hit with, probably not till the summer, because I think the federal government just extended it by 6 months, is that right now we've got 10 million people in this country that are late in their mortgage payments, right? Now, the article I just read didn't talk about how late. Are they 3 months late? Are they since March of last year when COVID hit late? But remember, they put in this forbearance protection that said, hey, even if you're late, the banks can't foreclose on you, right? They can't start that action. They can't even report you on your credit as being late, right? So there's this whole hidden fake real estate economy that we're all sitting on that we can't really know in the area because it's not even reported, right? If there were foreclosures, right, there were lists that we can all sign up for. I'm sure Karen might have shared that for you. There are services available that just watch the courts in Hudson County, in Essex, and Bergen, and just say, oh, new foreclosure was filed. You immediately get notified of it. So you can go bang on that person's door and try to convince them to list with you, right, to sell the property, right? So that's what we had the first time around, right, 8, 9 years ago when Karen and I were working on all these short sales. Today, we don't even know because those foreclosures can't be filed, right? So it's tough. Now, what we do know is the section of our economy that's been hurt the most by COVID, right? Which is the service section, right? As opposed to the financial sector, right? So if you're trying to target people who are in distress to try to get their listings, like I wouldn't paper the waterfront, right? Odds are all those guys at Wall Street still have their job or they return to their jobs and they're doing well, right? But if you're going to look to paper neighborhoods to see, hey, if you're in distress, if you haven't paid your mortgage in months, contact me. We can talk about, possibilities, whether it's listings or whatever, right? Obviously, you're going to be trying to target neighborhoods that you see as more as people who just work in restaurants, right? And bars and salons, whatever service industry that's been hurt more than anybody else in our area. Okay. So we applied to the lender and we've got to prove that we're broke. And they're not stupid, right? So when they say, give us your bank statement, right? And we don't give it to them, they assume we're hiding something, right? And they don't just ask for this month's bank statement. They ask for 3 months of bank statements. Because there's a lot of times this month says, hey, you got $346 in it, but 3 months ago you had $65,000 in it, right? And our clients all think they're super smart. Let me drain the account and then I'll send it. Right now, one of the good things, and Karen will confirm with you about short sales and working with my office, is you really don't have to know any of the mechanics of how that works. You will not be negotiating, right? I do all the negotiating on the file. So for you, it's really just the standard sale. You take the listing, you get it. The difference is twofold. One, the short sale process takes 3-4 months just to get an answer from the bank. So it's not like we're going to find a property that's closing in 6 weeks, right? So you got to be prepared to wait. The buyer's got to be prepared to wait. The buyers aren't prepared to wait, no point in taking their offer, right? And of course, in attorney review, I confirm all that, okay? Where you end up doing more work on a short sale than on a regular sale is that the clients don't cooperate with me. And when I ask them for their tax returns and their bank statements and their letters and whatever, they don't cooperate often. So then my call is to you. Hey, Karen, can you chase this guy? He's ignoring me, right? If we don't get these documents within the next 10 days, they're going to close the file on the short sale and we will have to reopen it and start from scratch. I need you to go bang on his door and get me those documents, okay? But otherwise, don't be afraid of a short sale. It's not like you've got to have some expertise that you don't have yet, okay? And that you should be afraid to take it. You know, when you should all have my cell phone number. If not, I think I can stick it in the chat window somewhere. Here we go, chat. If you're ever out with clients and there's questions, you can call me, text me, day, nights, weekends, right? I will get on the phone with you. I don't know if that popped up in the chat, right? But if you're not already saved in my cell phone and we haven't already worked together, just shoot me a text with even your first name and I'll save you. And that way, wherever I am, I'll pick up and I'll just be like, Karen, I'm in a Zoom meeting. Can I call you back in 2 minutes, right? But I'll always pick up and you'll know that I'm there for you. So you don't have to be that expert to answer for your questions. Well, why don't I just file for bankruptcy? Why should I do a short sale instead of bankruptcy, right? That's legal advice you shouldn't be involved in, okay? Get me on the phone. I'll talk to them about it, right? I'll confirm that they're okay and they can sign and list with you. Or sometimes after my conversation with them, I'll tell you, like, don't waste your time on this listing, right? It's so much work. You don't necessarily want to waste your time getting listings, right? I joked about Karen last year. I guess we had that party for you.
Yeah.
I'd be yelling at her sometimes. We would be on the 3rd deal on the same property. And like
That's Harrison. Harrison.
and it would be like a $76,000 sale. So it wasn't like she wasn't making she was making money on it. And the deals would die usually because the seller wasn't cooperating. So it's like, why are we taking this again? And I think for her, it was a marketing thing and she didn't mind losing money on it because it helped her in advertising in some other way, right? That's the toughest decision you got to make is when do I tell a seller, I don't want you. You're killing me. You're wasting my time, right? But we're going to have to do that. So I don't know if that's a good broad overview for you on short sales. Anything I should touch on there, Karen?
The cost. Who pays for the attorney? Who pays for the broker fee? Who pays?
Okay.
What are the costs associated with it?
Okay. So in using me, I do not charge our seller anything, meaning they will never have out-of-pocket money to me. Now, I do apply to the bank, right? The bank is the one paying all of our fees, right? That's the reason I just said, hey, on our $500,000 deal, right, we're only getting $460, right? That $40,000 that disappears is your fee, my fee, taxes, homeowners association, you name it, right? And now I'm going to the bank and saying, so you're $20,000 short, right? Do you agree to take that money, which really means they're agreeing to pay our fees, right? Because it's coming out of their check, okay? Now, back when we had relocation assistance, which may come back again as part of whatever federal bailout that comes along like we had last time. What relocation assistance is, just in case someone asks you if it's available, is basically when you apply, if you qualify, right, the bank, which really gets reimbursed by the federal government, might agree to give you $8 grand, $10,000 to help you move, right? Because if our clients truly are broke and unemployed, and now they're going to be homeless, where are they going, right? How are they paying for their mover? How are they giving a deposit on the next property, right? So when it's available, I always apply for relo assistance without even telling my client about it. But the primary purpose of that relo assistance is really not to give it to our clients, right? It's to pay bills that the lien holder refuses to pay. So for example, when I said, will you take the $460, $3,500 of that was unpaid condo maintenance fees. And the bank might say, you know what? I'm not paying that $3,500. So I don't want $460. I want $463.5. So now who's going to pay those condo fees, right? We're $3,500 short for getting clearance. Now, some condos will agree to take less money, but some don't. So here's the point. If I got a $10,000 relo for the client who doesn't even know about it, I'm taking $3,500 of it and I'm paying that condo fee. I am not letting this deal die with free money, right, over some debt of the client. Okay, I submit a legal fee, $5,000 to the lender. Sometimes they give me the 5, sometimes they give me 3,500. If they give me 3,500 and I got the client 10 grand of relo money, they're signing an agreement in the very beginning, so they know about it. Hey, I get the $1,500 that the bank screwed me out of your $10,000 that I got for you, right? So in that example, it might be that our client ends up getting $5,000 of relo money, which is really a gift, right? Especially because I don't tell them you're getting it, right? We have it. And usually when we get it approved, the client's like, oh my God, like it's a surprise, it's a present, right? If you tell them, hey, this is there, right, in the beginning, they think they're entitled to $10,000. And then even if we get a short sale approved, they might say, I'm not selling my house unless I get the $10,000. Well, guess what? Then I'm not representing you, right? Like if you're not in it, I'm not in it, right? They've got to be committed to this process. And one of the hurdles I remember having to overcome back then is convincing our clients, what is their benefit? Why should they sell the home? They might as well just stay in it another year until the court drags them out, live there for free, right? Why do it? And when their feeling is, why should I bother doing it? They don't cooperate with us because they don't think they got any skin in the game, right? So what's their skin, right? So their skin is this. One, right now, in my example, they're already $20,000 upside down, right? And if it's a year from now, they'll probably be $50,000, $60,000 upside down. So if they don't take care of that, that becomes a debt against them, right? They could have a judgment against them for $50,000 that's going to follow them for the next 20 years, right? They won't be able to buy a car, buy a house, do anything without taking care of that $50,000 debt, right? Also, right now, we're going to have this protections from the government. If we wipe out that debt, as part of the short sale, that $20,000 shouldn't be taxable income to them. Technically, when you get a debt that's forgiven, that's the same as income. So if you made $60,000 that year and you were just forgiven $20,000 of mortgage debt, you just made $80,000 as far as the government's concerned, and you owe income taxes on that 20. And forgetting just the 20 might push you up into a higher tax bracket, right? So we've got these protections now that the accountant files. It'll say, hey, this wasn't really income. It was part of a short sale. It shouldn't be taxable, right? And we can take care of that. But $20,000 compared to $50,000, right, is a great thing, right? As far as why should they be in on this and saving them on maintenance, on their condo fees, which is a whole separate personal debt that a condo association can sell you on. And then they say, well, fine, then I'll just wipe it out in bankruptcy. So are bankruptcies free? No, right? Forgetting the legal fee, which is going to be about $3,500 that they got to pay up front. The court takes all of your assets, right? And they use all of your assets to pay off all of your debts. And then you're released from everything and you're free. So if you've got $30,000 of assets, they're not going to leave you with zero, but you might be left with 10, which means they just took $20,000 of your money to pay off all these debts for you, right? So is a bankruptcy free, right? People say, oh, I'll just wipe it out in bankruptcy. It's like, all right, well, they'll just take your money. And now it's the court and it's sworn and you are giving them every bank statement and every tax return, and you are not stretching the truth, right? In a bankruptcy court, especially because it's also federal with bigger penalties, right? So we got to convince them on day one, they should be interested in trying to sell this home now, right? Now, even if they sell, they won't even have a 180-day late payment on their mortgage. If they're in forbearance and we sell it before the forbearance period's up, they won't even have that credit hit, So I think the toughest thing is step one is convince your sellers why they should sell today, right? And also we're at the top of the market today. And honestly, my expectation, and it's great because I got money sitting on the side waiting for this to happen, is once these 10 million foreclosures get filed, the market's going to tank in certain neighborhoods and places and states and cities and whatever, right? And I'm hopefully going to be the one to buy a couple of these because I missed it last time around, right? None of Karen's properties though, because they're not structurally sound.
Not fair.
Like a wall in the basement missing with dirt coming in. It's like, what is this? But anyway, so the fact is, once things get released in the summer, prices are going to tank, right? Is what my expectation is. And is that $500,000 house still worth $500,000 then? No, right? And even if it went down by 20%, and we saw bigger price reductions than 20% back 9 years ago, right?
200,000 like automatically overnight, like boom.
Right. So your $500,000 property down by 20% is now a $400,000 property. Are you now $20,000 upside down? No, you're $120,000 upside down, right? Much more difficult to deal with, much bigger tax implications and debt implications for you, right? If you really are distressed and you're not going to be able to make it up, now is the time to sell. If you can find those people who haven't paid their mortgage, right, who are in distress, this is a good time for them to sell, right? Now, if they're unemployed and they've got nowhere to move to, they might as well stay there as long as they can. They don't have an option, right? But if they've got their job and there's just no way that they can bring their account current, maybe there's a good time, rip off the Band-Aid. Let's get you into a rental, right? While your credit's still good, get you out of this debt, right? And when you get your nest egg saved up again, we'll get you back in, right? But we can figure out with them at the listing appointments, how upside down are they, right? A lot of times when they look at their bill, it'll show they owe, like we'll just say 420, and they go, that's great, I can sell it for 500 and I'll walk away with money. But what they don't see is there's another line, right? The line that says 420, that says principal balance on the loan, 420, right? Then there's another line that says accrued interest, right? $48,000, because they haven't paid their mortgage for a year, right? Or their taxes or their insurance, but the mortgage company is taking care of all that. So all of a sudden there's these accrued lines, and that's why all of a sudden they owe 460 and they don't owe the 420 that they think they do, which is the principal balance, because every mortgage payment they miss just gets added up to be owed in the future, right? So if you're on one of these listings or talking to these people, it's best to get a copy of the actual most current statement. So then we can say, really, what do they owe, right? And you got to find out about condo fees if they do live in a condominium. Have they been paying those? Because that can mess things up too. It's another lien we got to clear to close, right?
Now, should they live in the house until, or should they move out?
No, I don't think there's a problem with them living in the house to begin with, especially because, you know, depending, unfortunately, the people who are most in need are also the people most likely to live in a neighborhood that if there's a vacant house, it can end up getting vandalized, right? And we've all had that where we put in a brand new hot water heater and 3 days later, someone else owns a brand new hot water heater because they know the property is vacant. So I'm fine with them staying in there. One of our problems is going to be, especially with multifamily houses, is we got to find out, like, are their tenants paying, right? A lot of these landlord owners who aren't paying their mortgage, they're saying, well, my tenant's not paying me, right? And now how do we get rid of tenants? We probably can't. And that, you know, how we can't afford to bribe them to move out. And now when you get a buyer who's going to be an investor, he's going to say, well, I'll take on your tenant problem, but instead of giving you 500, I'll give you 470, right? And I'll adopt your problem for you. You know, there's a lot of issues we got to walk through. And that's why
Marty,
I said, call me. Yeah.
So say like you have a short sale, the person became unemployed, but they've been paying on time up until that point. Would it be recommended if they can rent?
I doubt it would be a short sale if they're paying. But
Well,
I know what your question is getting.
I'm saying prior to losing their job. So a short sale is what, like a couple of months of not paying your mortgage?
Yeah, if you, well, you certainly, if you are current on your mortgage, you basically can't apply for a short sale because by definition, you can afford it, right? If you're paying your bills, you can afford your bills. You may not like it, but you can afford it. So although the banks might tell you if you call them up, do I need to default to apply? They're going to say, oh, no, no, no. That's just because they want to get as much as they can out of you. But the practical answer is you got to be in default. You can't be making your mortgage payments if you're going to be applying for a short sale.
And what constitutes a default? Like how many months? One month?
One missed payment. Hey, you say I missed this month and I'm not going to be able to afford to pay next month. And here's my bank account. I got nothing in it. And here's they want pay stubs, right? And guess what? Unemployment counts as a pay stub.
Right.
And some people were making more money on unemployment than they were making when they were employed.
True that. True
right?
that.
So
but
that's
Marty,
a pay stub. You don't get to say I'm unemployed if you're collecting $600 more a week than you were before. That's
Remember, Marty, we had the one that was on welfare and food stamps, and they like, it's income.
right. Income is income, right? But so
Yeah,
then
but see, that's the thing. We had this discussion, Karen. You know, even like with renters, that's their income. Unemployment is their income.
right.
So why do people look down on it and say, no, you don't qualify for this unit or whatever?
Oh, okay. Well,
I know that's a whole nother subject,
but the answer is real quick. When you have a job, it is assumed that you are going to keep that job forever, right? You don't have a job and it's assumed you're losing it in a couple months, right? When you have unemployment, right, it's not presumed that unemployment insurance lasts forever.
right?
So, just using that as an example, no one gets to say, I have an unemployment income, therefore give me a car loan, right? Because when does that end? Is the thing. Just like we saw that the enhanced unemployment went away, then they brought it back, or they were, it's really
One of the
not.
options, I'm just thinking like from a client, like if it was me and I missed one payment and I know that the next month is going to be hardship, and I wanted to rent out my condo, so let's say it's a condo. What kind of advice would you give a client than taking that step to do a short sale or bankruptcy?
Here, okay, well, here's your problem. First of all, once you put in a tenant, you know you are never getting rid of that tenant, period, right? Forgetting the current, COVID restrictions and the fact that there is no landlord-tenant court at this point, right? The fact is, in a general thing, getting rid of a tenant who's month to month, who didn't want to go, will take several months, right? So now when you're going to sell this home, you've got to find a buyer who's willing to take a tenant, right? And most short sales, because trust me, we had lots of properties that were rentals when they were short sales, right? Those people who stop paying their mortgage, just like you're talking about, they don't care about their tenant. They'll put in anybody, right? And if fair market rental is $1,200, they'll take $800 just to have somebody in there so they can be collecting some kind of money, because they're abandoning the house anyhow because it's upside down. They could give a shit, right? Now we go to sell that property and the new buyer's like, who's this tenant? And they're paying below market. And then, of course, they do something stupid, like they sign a 2-year lease or even a 5-year lease, and they put their nephew in there at $400. Ha ha ha! I'm smarter than the world, right? Come on, right? We got to be reasonable in this, or you're just going to undermine the ability to sell it, undermine the ability to get short sale approval, and waste your time as a realtor, right? So. Trust me, every game that's out there been played, and Karen was part of it.
You ain't right, but you ain't wrong, Marty. The first thing when I came into real estate is like Harrison was like, I don't want to say a nightmare, but that was like, it took you through the ringer. So yeah.
Well, Harrison wasn't the only matter, right? A lot of these things. And it is because people go out there and they think in the short term of, oh, if I can make an extra $400 today, wouldn't that be great? And they don't think about, how does putting a tenant in there undermine my ability to actually get out of this problem, right? And remember, right now, I think there's a moratorium on evictions to like the summer, like August, right? Who knows if that's going to be extended. But what happens come August? Come August is going to be what? 30,000 evictions filed in Hudson County on one day. How long is that going to take you to get to court? Right? Back when things were good, it'd take you 3-4 weeks. Now it's going to be months and months and months before you even get to court. Right? And then let's assume you win and they don't exercise some hardship extension BS. You think the sheriff is available next week to go remove those people forcibly to the curb? To me, if we've got someone we got to evict today, we're probably looking at 2022 before we could actually forcibly remove them from our properties. Right?
Wow.
Which is why I'm telling every one of my sellers who has tenants, give them money to get out. Give them 5 grand, 7 grand, 10 grand. Get them out. Like if they agree to get out by the end of March, give them the money. Don't give it today. We give it after they're out, right? I mean, there's things we got to do. There's agreements. I write up whole contracts related to it. It's not just a text message thing to get rid of them, because if we sell it today, we get full price value from a buyer, right? So it's all business. It's not about whether we like our tenant. Our tenant sucks. They don't pay our rent. They smoke. They do whatever. We hate them. But the question is it better for me to wait till next year when maybe they move out? Or to give this rat, right, 10 grand because I got a buyer who's in a bidding war willing to give me 20 grand over asking, but it's got to be vacant, right? So from a business perspective, give that guy $10,000 to get out. It's the best money he ever spent, right? I had one a few years ago. We gave a tenant $50,000 to get out because he was a lawyer, so he was a real bastard, right? But he lived in a 4-unit house in Hoboken, and the people were with a previous lawyer the first time around. They had an offer of like $1.6 million on this property, but only if it was vacant because they wanted to convert it to condos, right? 4 condos, $1 million each, make a ton of money. And of course, you can't just evict somebody out of a 4-family house, right? You got to give them the right to pay the rent. So it killed the first deal. So the agent got him to me on the second deal. Second deal was 1.85 million, different buyer, up from 1.6, right? So I slapped my client around and got him to agree. Let's negotiate with this tenant, right? And ultimately we ended up at $50,000. And guess what? My client now netted 1.8 million instead of 1.6. We should have thanked this tenant for screwing up the first deal. We made a lot more money, right? But it's not about how much we hated that guy, that tenant. It's about what's best for us. Giving him the 50 grand, even though we hate him, right? Or standing on some sort of principle and losing money. So same thing with all of our real estate sales. If there's tenants in there that they're deadbeat, we got to find out what can we do to get rid of this guy. I mean, you guys have an advantage because you know how much that tenant paid in rent. You know the square footage, you know the location, you know if there's parking, and you know how to find another rental unit for that tenant. So now when we're talking to that tenant about, hey, we'll give you this money, 10 grand to move out. It's like, and here's 3 places I'd be happy to show you, right? Right? And help you. And you can afford it and it meets all your qualifications. In fact, it's nicer than this dump that you're living in now, right? And help smooth that transition over. And it's really not about, do we like our tenant? It's what's best for us. But don't let, if there's a vacant property, leave it vacant. Don't stick a tenant in there. It will screw up every ability to sell, or it will depress the price because now the only buyers we have are going to be investors, because people who want to own or occupy aren't buying one with that tenant, right? So you might have made an extra grand in rent and then you lose the ability to sell. So we really want to sell now before they get rid of this moratorium on foreclosures.
Marty, I'm gonna jump. I gotta jump on another call, but I got your number. I'm gonna call you because I have to discuss something with you.
Yeah, just shoot me a text first.
Yeah, I will.
So then I'll save it. All right.
Okay. Talk to everyone later. Have a good day.
Thank you. All right. Anything else, Karen? You want me to?
You can open it up for questions now. Anybody have questions for Marty?
I have one if I can. Hi, Martin. This is Vendula. Thank you so much. I learned a lot. I have a question about a little bit different scenario, but still short sale. So let's say that it is not a single seller, but it is actually a developer. So it is basically somebody who bought property, developer, and the prices crashes. And obviously the whole project go bankrupt, right? And it has to go back to the bank. So some of the developers sometimes try to do something like short sale, right? They try to quickly sell it. How does it work? Is there any trap we should be aware of, something different?
Okay, well, I can tell you that really when we have an LLC as an owner, short sale is really not a something that we can use. It's just not. It's going to have to be a bankruptcy. And remember this, most of these, when there's a mortgage on an LLC investment property, the bank almost always makes the developer personally guarantee that loan, right? I mean, when we're talking big companies, that's a different thing, but they're not short sales anyhow, right? KHOB or whatever, right? They get to sign their own mortgages. But when it's just, Hudson County Investment and Development number 2, right? And it's just 2 guys that own it. I guarantee you when they applied for their mortgage in the LLC, they also signed it personally, right? And they're probably going to have to go the bankruptcy route. Really, all this relocation assistance, all this debt forgiveness stuff is really about consumers and principal residences and things like that. So unfortunately, and I don't know the specifics of it, you're welcome to call me, but as a general rule, short sales are not there for LLCs.
I'm kind of asking because there are sometimes very good deals, as I know that the LLC, they have to obviously, for them, create the LLC, it's personal, right? So there is a backup by their own assets, but there are sometimes good deals to find for our client, for ourselves, for the buyer. So I was just wondering, is there any way to find out like where this thing is happening? Or you know what I mean, right? There is probably very short period of the time when the developers, because they have to sell, trying to sell in a good price, right? Can they do short sale that time, or does it have to go directly bankruptcy of the LLC and then it goes directly to the banks?
No, okay, first of all, understand this. I actually don't mind bankruptcies. There's nothing wrong with someone going to a bankruptcy. If you have a seller who's bankrupt, you can still list the property for sale, right? It's subject to bankruptcy court approval. The nice thing about a bankruptcy is it's not emotional, right? There's an objective determination of who gets what by the trustee. And the trustee will usually release the property from the bankruptcy. Once the bankruptcy attorney shows the court that the house is worth less than is owed on it, the trustee no longer cares about the house. They're like, yeah, you can go ahead and sell it, right? And it's often cleaner for us to sell with a court order on a bankruptcy than on a short sale, okay? Also, we know someone who's filed for bankruptcy is actually bankrupt. Where our short sellers often roll up in their brand new $60,000 car saying they can't afford to pay their mortgage, but they put all their cash into their car and they're not really bankrupt, But I mean, these are properties that you see listed, or you're asking the question like, how do you knock on doors on developers and ask them if they got a property for sale? I don't know. How
No,
are we getting it?
I actually was in the situation when I bought it and it was really good deal. But in the end, as a buyer, I was the buyer. I ended up with certain fees, which I was not happy about because obviously there was kind of like it was between the developer filing for bankruptcy, getting it back to the bank. So the bank became basically the
Oh, so
owner.
bought
But
it from the banks. You bought an REO, basically real estate owned property.
yeah, it was
Bank.
kind of interesting.
Yeah.
But I was just wondering because, as I said, in the end, there were like a fees, which basically the price didn't match the
No.
price different thing, and then there were the fees. So, but they still kind of call it short sale, but I think that it was exactly what you said. So, yeah.
Yeah, no, because often when you're buying those type of properties, it says, like, here's the price, but you're responsible for any tax liens, any on the condo fees or any of these other fees, right? Transfer fees are all on the buyer. Because basically,
1.5 origination fee.
right, but they're, the bank has basically figured out, here's what I want from my net to walk away. And buyer, if you agree to my net, you pay all other possible fees that are due. Now, it's the same thing as if you went to a sheriff's sale, right? Like sheriff's sale doesn't wipe out, tax liens and sewer liens. It does wipe out condo liens and stuff like that. But there's a lot of times where a buyer goes to a sheriff's sale and they win a property, and then they find there's another $18,000 in fees that are due, and they went in blind. That's a whole nother conversation about, we can do certain title searches and stuff like that before you put in offers on properties that have those conditions on it.
Yeah, no, that answers my question. Basically, be aware of it. Make sure that you really check the liens and check the titles. What kind of fees are that in case that you're buying something like that? I guess that you answer my question that way. Yeah, that was really helpful. Yeah. Thank you.
My pleasure. Anything else? All right.
Shantae, I think just came off. Go ahead, Shantae.
Oh no, I was just getting ready to tell Martin thank you.
Oh, thank you, Shante.
You're welcome.
All right, well, look, you all have my number. If you're just too shy to ask, or right after we hang up, you think like, oh, I thought of something, shoot me a text. I'm honestly going to be taking a real quick shower and run to a closing. So I got late for you, so whatever. That's why I'm not dressed up. But as I'm driving, I'll call you or reach you back whenever to answer your questions. All right. So even if it's not related to short sales, just always know you can reach out to me on the buy side, need advice on bidding wars, how to get your client to, waive things, or they just want some more advice than you're willing to give. You can reach me on any kind of file, and I'm here for you. All right.
Thank you so much, Marty.
Thank
We
you.
appreciate you.
Thank you.
Thank you, Marty.
Bye now.
All right, guys. Today was just a discussion with Marty. I was not doing any paperwork, but as y'all know, I got classes online, YouTube, whether you're looking to work with the landlord, the seller, the renter, the buyer, they are all on YouTube. If you need help with NTN, if you need to do a CMA, if you need just to navigate against the MLS, those are all on YouTube. You can go back and refresh those for the day. Today, I just set up, because we had a long week of family reunion, I just set up the conversation with Marty. Any questions for me before we end?
No, thank you, Karen.
No,
It was
thank
so
you, Karen.
informative. I appreciate it. I have 1,001 questions, so I'm going to be calling Marty.
No problem, no
I didn't want to
problem.
monopolize the time, but I will call him and do a one-on-one with him. But thank you, and I appreciate all that you do. You bring all of this powerful information to us to help us grow our business. So I'm appreciative to you for doing that. So thank you.
Problem,
What
Brenda,
she
no problem.
said,
Thank
Karen.
you. Thank you, Karen.
Thank you, Karen. You're welcome, Christine.
Have a good day, everybody.
Thank
You
you.
Bye.
too.
Call me if you
Thank you.
need me. I got my
I'm
phone
calling
number.
you now.
All righty.
Hey, everyone.
Bye-bye.
Bye.